What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is August 22nd of 2018. Well, folks, it's time for a daily update here on the DataDash channel, and today we've got a few key things to discuss here on the update. First and foremost, as always, we're going to be spending a decent amount of time taking a look at market valuations as well as doing some technical analysis on the market leaders. But outside of this as well, we've got some key topics to discuss, predominantly in traditional markets. I want to spend some time to look at an indicator today that has only flashed 5 times in the past since the 1800s, and I want to talk about what it means for the U.S. economy and also give you all a really good view as to where I currently stand on traditional equities as well as commodities. There's a lot of interesting things going on. Many people have been questioning whether or not the rally will continue in stocks, and I want to spend a decent amount of time as to how that's going to play with crypto as well. So that being realized, let's go ahead and dive into the video, everyone, and take a look at cryptocurrency markets. At the moment, we've again been feeling a good green plethora of price action. We can see across the board most things are up at the moment. Whether or not they're keeping up with Bitcoin is another question, but at the moment we are seeing altcoins do quite well. And again, a lot of them are familiar faces that we know. We've seen NANO been doing very well. Walton Chain's been killing it as a recent. VeChain as well has been at a consistent run up. We have a few key players here that have been doing very, very well across the board. Going here to market cap, though, even though we've been seeing this, we haven't really seen much of a rebound just yet. We got a little bit of a bump in Bitcoin over the past few hours, and that obviously has helped to continue carrying markets. But we can see here on a monthly basis that we are just slowly but surely coming back up above $200 billion in valuation for cryptocurrencies, which is good to see. We want to see $200 billion hold, and we want to see us hopefully continue to climb to higher levels. But this is going to be a matter as to whether or not Bitcoin can get over some key indicators on the chart, which we'll take a look at in just a bit. But as we go down here to take a look at Bitcoin dominance, the other day we had seen quite a steady drop in Bitcoin dominance, but we've seen a recent rebound and come back into it. I'll be fair though, I don't think you're going to see higher levels of dominance unless we have an ETF confirmation in the next few weeks or some kind of catalyst. Again, I don't think Bitcoin needs it, but you're probably expecting that it's going to be announced sometime this year. I believe you will get an approval by the end of the year. I've been sticking to that, guys. But at the same time, the announcement that's coming up soon, where the SEC is going to announce whether they approve or postpone or decline one of the Bitcoin ETFs that they're reviewing, is going to be coming up tomorrow on the 23rd, and that's something to watch. There was a really interesting tweet, and I wish I could bring it up actually, from Alex from Nuggets News, one of my favorite YouTubers in the space. I love all the Australian YouTubers, but he brought up a really good point, and that was the fact that there's kind of 3 scenarios that you could get with these ETF announcements. You could get a rejection, for example, which might lead towards a slight minimal drop in the price of Bitcoin, and I think most of that will be recovered, like he stated in his tweet, because people expected. A decline and a decision on the ETF or any of the ETFs is actually going to be seen most likely as a positive, because it's showing that we're not, obviously like the last ETF, for example, unlike the Winklevoss Twins ETF, that we just simply postponed it and we're still reviewing it. That shows that there's much more of a mature review going on, that they're considering it, that they're contemplating it, that they're not outright rejecting it, and that could lead towards a slight boost. The big kahuna, though, would be if they were to actually approve it. I think in most cases, guys, to be fair with you, as much as I think one is going to come this year, they're going to wait towards the later part of fall or mid-December. More towards midwinter in that case. So you could get it in sometime in December before we really step into the holidays and towards the new year. I think that's going to be the case, and again, we'll talk about that as we go through traditional markets later on. But generally what I'm watching for here, guys, I've been very patient on this. I know a lot of people, you can obviously see the sentiment in the market. The longs have been depleting. We have almost close, or we did just a few days ago have close to around 10,000 less long positions on Bitfinex, and then along with that as well, we've also had a close to record level of shorts. Now, this isn't exactly true. If we take it to the, we'll take it to the 2 hour here, and you can see more clearly. Sometimes the daily will modify the chart. We actually had around 40,000 positions back in April, but we got very, very close to testing these highs again. And again, as a contrarian, I always play contrarian to the masses, because that's usually who wins. That's if you guys are trading actively in these markets and you're trying to trade off of a few $100 movements or $1,000 movements, you do not want to follow with the crowd, because the crowd is predominantly wrong. Now, this time we could very well see shorts be right, and it could just be the fact that there is a mass liquidation on longs and that shorts continue to build up and price goes below. However, Price has been very steady. We only for a few seconds tested below 6,000. We've been maintaining it as support as we've seen here in the past. And we even got a very nice little bump up the other day. Now, one thing I noticed as well in the charts here for most of the, pretty much all the exchanges is the price movement that we saw for pretty similar levels of volume. We can see here on the sell side that Bitcoin was only able to drop around $150 here on this chart. You can see on the hourly, this even outpaced this hour here in regards to buying. And notice how price recovered very quickly off those levels. We couldn't even touch 6,000. Whereas over here, we had less volume. We had 15,000 Bitcoin traded within around, I think it was around 14,000. Yeah, I was going to say most of it was on this 1 hour candle. 14,000 Bitcoin traded, less than that previous hour, and we had a much, much higher range of price to the upside. Now, why is this? Why are we seeing this? Well, because when it gets towards the $6,000 range, as we've seen historically, folks, there are buyers that come in to fill the order book. You have a much more liquid order book on the buy side going towards 6,000 than you do on the sell side upwards in that case when people are on the order book. If people are coming to buy in, there's not much Bitcoin to sell on the upside. And that means price can move very quickly in that case because most people are looking to buy at these levels and not looking to sell. If they own Bitcoin, they're most likely setting their sell price at a much higher level or they're hodling. So my rationale here is if we get, again, if we take a look at the hourly here, we can see that price is generally kind of building a line of support here. We're cupping around. We're actually kind of building support, what appears to be on previous resistance over here before the breakout. If that continues to build up and hold and starts to cup around in price, I think we could very well get another breakout and we could start to see a decent amount of a short squeeze. And that could lead us towards having a very, very green day over the next 24 or 48 hours, coming up to test this line of resistance in the past to see if we can get above these moving averages. And then what I think you're going to get is you're most likely, if we can get that over the next few days, you're going to get a continuation up here, test the 200-day, probably get a rejection, and then like we did in the past, try to see if we can hold on the 50 and 100-day here. As we tried in the past here, we broke through. Along with that, there was the 21-day. In this case, though, I would be keeping an eye on the 100-day moving average and see if it can line up here with the 50-day to provide support, and again, hopefully test to see if this line of resistance can become a line of support, and then I think we can continue to move upwards above the 200-day. Now, that is if we're going to get another boost up. We're going to have to wait and see patiently, guys. Again, we're still in the twilight zone. We're not getting eager here. We're also not getting fearful. We're not, championing $8,000 Bitcoin or $5,000 Bitcoin. We're just going to remain patient on this. We're in the twilight zone, very neutral position here, testing support. And the more we test this here, the healthier Bitcoin's price stability will be. The price strength confirmation will clearly show. All right, I've ranted on about that enough. That's my general stance on Bitcoin at the moment. Taking a look here at Ethereum. Ethereum coming down, unlike a lot of altcoins that have actually been holding quite well on their dominance. It seems like some of the large caps have started to correct back down, and as Bitcoin started to boost up, it hasn't been able to maintain the momentum. Ethereum is still testing around, I think, the $300 range at the moment or slightly below it. But I think we need to see this come down again and touch closer to the big even at 4 million Satoshis. Been talking about that. It was nice to see a bounce upwards because obviously it shows that people are watching this line of support here. That's why there was such a massive amount of buy-side action and people came in a little bit early. It's one of those trading tips I always tell you guys. I don't want to recommend you to do anything, but when you're going about trading or investing, understand that if there's something that's very clear and that you feel everyone is watching, always play a step ahead. Be a little less greedy on price than the other players. That's at least how I think, and I've made sure to do that so I don't miss out on opportunities. And it's helped me a bunch in traditional markets as well as cryptocurrency markets when I set limits to buy into the market. But at the moment, nothing too crazy going on here with Ethereum. We obviously had some buy side volume coming off those lows, and at the moment I think we need to retest not only those levels but possibly come a little bit lower and touch that big even. If we can get that, it's going to be very healthy for the long-term trend of Ethereum, and so long as it can hold, I would definitely look at doing a long position on it as markets start to stabilize. Going on here, let's take a look at a few more different players here, go through some of the major ones. XRP going through a current flag at the moment. This is looking quite nice. Now, what I'm looking for is to see if it's going to break below 50,000 Satoshis. If it does, and you get a decent red candle, this is probably going to come back down and test towards the low 40,000 Satoshi range. If not, slightly go lower. Again, if we don't see altcoin season just yet, maybe we'll have to actually test the even, which we didn't really get to down here, much like we didn't see with Ethereum. But I think you could very well see a break on it. We're very close to it. But yeah, and so long as if Bitcoin can't carry altcoins, especially some of the large caps, which we see are struggling at the moment, I think in this case you're probably going to see a revisit on the lows here with Ripple, especially if we get a liquidation on Bitcoin. Going on here, let's go ahead and take a look at Bitcoin Cash. Bitcoin Cash, again, still testing around 8 million Satoshis down towards this support level we'd seen back here, as well as over here. At the moment, though, not making any active trades in this. This looks like it could easily break down and double bottom, going towards the lower levels we have seen in the past, maybe possibly even around 6 million Satoshis. And the reason I say this is because of what we talked about a few daily updates ago, which was the IPO for Bitmain. There's a lot of issues that I think you guys should look into in regards to that. I think it's fundamental to understand whether you like Bitcoin Cash or not. Going on here, let's go ahead and take a look at a few more. EOS BTC, it looks like, again, as we've been talking about, the large caps, they look like they're rolling over, at least wanting to retest their bottoms comparative to Bitcoin, or might even want to retract to lower levels. And this is where we could possibly see a big rise in Bitcoin dominance if some of these have serious breakdowns. If Ethereum doesn't hold its technical pattern, if Ripple continues down to some of the lows we saw in December, and if players like EOS, some of the newcomers, the new multi-billion-dollar cryptocurrencies, start to retest towards previous levels of support that are a tad bit lower. Going on to take a look at a few more. ADA BTC, Cardano, still testing on that key support level, retesting the lows here. Again, a lot of these are on the verge where they could break down a little bit more, and this is the only way I could see Bitcoin dominance rising. But at the moment, nothing scary. We want to see a good breakdown candle to confirm that this is going to continue the trend downward. At the moment, it's holding at previous resistance, now making it support. So that's good to see here. We can obviously see the price line is lining up right here at the resistance level before the breakout. Going on here, let's talk about Litecoin. Many people have been asking me about it. We are getting very, very close towards an area where I'm going to possibly be building a position in Litecoin. I haven't gotten one yet, but again, have been keeping an eye on 800,000 Satoshis. Not to mention, if we take a look at the USD level here, the USD level is looking very nice. It's testing at this level, pretty much closing out the parabolic run-up that we saw back in December. So in that case, or actually, excuse me, actually it was December. Yeah, it was one of the early birds comparative to most altcoins. But in this case, I want to see it hold here. I want to see it hold around $50. If it can do that, I'm going to be very impressed and could very well feel comfortable with establishing some longer-term large cap cryptocurrency positions, and Litecoin would be one of them. XMR BTC, I'm feeling really comfortable with XMR. I have not invested in it just yet, but I'm thinking about buying some if it comes back down to this level of support again. Might get a little bit eager and build a position before it tests that level just to make sure we don't get a flash rally and I miss out on it. Again, I love how this has held support over 5 times in the past at this key support level, and I think it'll do it a 6th time. Going on to talk about a few more players here. We'll talk about some that I know you guys love to keep up with. Icon holding very steadily around its opening price on Binance. I think you're not going to see it go too far distant from there. I think you're going to get some scrappers at the bottom buying in. I think some institutions are going to get interested at these levels. Going on, there's one... Someone asked me about proof of authority, and I want to get it here on a longer-term chart, get on the Binance chart so we can get some price action. This one, like a lot of protocols, has been oversold. And I'd set up a trade here to potentially do on proof of authority. I never did actually execute it, but I did have a tight stop. So again, you got to use stops if you're trying to trade these plays, guys. And it ended up going much, much lower, and that's why you have to establish them. Down at 1,000 sats, though, this is very interesting. It just seems like a lot of other protocols and ICOs, it seems like at the moment I'm not too eager to get into the less established protocols. I want ones that have decent communities, decent tech, and actually have a sense of established branding with the community. Again, you have to be able to market yourself to a decent degree. It's a fair point with crypto. But for me, more than anything, guys, I'll let you know what I'm sticking with. Again, it's the peer-to-peer digital currencies. Nano has been holding up very nicely compared to Bitcoin, whereas most of these altcoins have been turning down. This one was drastically oversold, in my opinion, and is now trading in the double-digit million-dollar range for daily volume. If we get above the 50-day here, I think this is going to climb all the way up over the next few weeks above the 100-day here and could continue higher if altcoins get a rally. And I think test towards the 200-day. That's my goal. I'm hoping Nano will get towards around $5. And after that, I think we'll need to have a steady correction, build a base, and we'll see where it goes from there. Going on, let's go ahead and take a look at one more. One of those is Dash. I've been keeping my eye on. Dash again, still testing around this range historically. We're slightly below it. Again, we broke down to newer levels over the past few hours from the lows we had back in early August, where we got a rebound in altcoins. We might be expecting a little bit more lows on some of these large caps. Again, they're not keeping up with Bitcoin. The optimism isn't there just yet, which is nice. We could get some more discounts on these plays. So remaining patient. One last one. NEM, obviously. NEM trading back down towards the range where it was back in December. I think that's where you're going to expect a rebound when you get down towards those lows around 1,200 Satoshis. I'm going to be keeping a very sharp eye if it reaches those levels. Okay, so we can see generally, summarize things, guys. Altcoins right now are holding a little bit more steady than where they were the past few days. Most of them are up over the past 24 hours, and really over the past 7 to 14 days, we've been seeing altcoins come back, rebound a tad bit, and optimism come back into the market. We haven't seen an absolute rebound. Some people were a little bit upset at the title I had in my last video. It wasn't meaning to be clickbaity by any means, but we did get a pretty steady bounce the other day. So it is nice to see cryptocurrencies at least building some price strength confirmation, valuations holding above $200 billion, and also Bitcoin signaling some decent confidence. But we all know Bitcoin is most likely going to have to be the carrier in this case. So anyways, I want to go ahead and talk about traditional markets here, and I also want to teach an important lesson to you all from what I've learned over the past few years. You can take it as you will and learn from it. You might agree or disagree, but there was a really interesting Zero Hedge article. Zero Hedge is like, to put it simply and lightly, it's doom porn. Like everyone loves to just, pardon my language or my rude analogy there, but on Zero Hedge, as much as I love the site, they love to post articles about, this indicator that's signaling a market recession. They've been talking about it for years, right? But it is important to keep up with these things. And at the same time, it's important to keep a neutral mindset. And I'm going to talk to you guys about how I kind of interpret these things, because this is a very important indicator. It's a very simple one. But if you go through this article here, it talks about something known as the Sound Advice Risk Indicator. And it's created by a guy named Gary Cardiff. Basically, this has been an indicator he's used for the past few decades, and he's published in his newsletter, but it's a very, very simple indicator here. We can pull it up here on the separate window, and it basically is talking about the ratio between stock prices, equities in general, comparative to the median new house. So in this case, it's taking new house prices, newly built houses, not traditional old houses that have aged over the past years, new homes comparative to equity prices. And he has a ratio zone. The low risk zone, this is kind of the, I would say, pretty much the neutral zone here, and the high risk zone. Now we can see here that stepping slightly past 2015, more towards around 2016 and 2018, we have passed this level here. And we can see that we're in the high risk zone. So with these kind of indicators, we can see that obviously it's signaling, okay, equities might be overvalued here. And it might mean that housing might be a better asset. It might mean that the housing market isn't as overpriced as stocks are, at least new homes in this case, or that we might need to go towards hedging positions. We might need to look at precious metals, or at least in my opinion, I believe cryptocurrencies will be seen as a hedging asset once there's an ETF or ways that people can on the mainstream invest in crypto. The fact of the matter is, though, it is important to take into mind, as much as I think we are on the later end of this bull run, guys, that there is very well a chance that we can continue. And we can see that in the index here. We've only seen 2 times over here, 2 times in the past. It's a 50-50 where you get a close around the 2 ratio. And here you have, for example, the roaring 20s as well as the dot-com era, where we almost tested towards 3, or we did in the past, testing towards higher levels. So what I try to tell people about with these indexes and these indicators is that to take them and not at a face value, but really kind of understand the substance behind them, right? There's no one-all indicator that's going to tell you when the market corrects. And if there was, it would be leaked out by now. Someone would be talking about it, or if it is out there, no one knows about it, and a few select people do. That being realized, with what we have to work with here, with these kind of indexes, we need to take them with a grain of salt. And we need to understand that a compound of these indexes might be signaling that we're close to a recession. But more than anything, I always talk to everyone about markets and not going against the trend until the rules change. And what do I mean by that? That's when we see the underlying fundamentals change in the market that is going to lead towards the mania collapsing. And it's very simple in the United States. It's pretty much interest rates and quantitative easing or quantitative tightening. And in this case, we've been seeing quantitative easing cut. We're now going through the quantitative tightening phase. We're starting to roll back. The Fed is starting to release some of these assets onto the market, some of the treasuries that they bought. And along with that as well, we're seeing interest rates rise. But we're still below 2%. So you have to keep an eye on these indexes, and you have to also set your targets. What interest rate do you think is going to be the range where you'd feel uncomfortable holding equities, where you feel that there's going to be a malincentive to borrow capital to reinvest in the market? Because that's pretty much what's propping things up. People are just borrowing a lot of money off low interest rates. And it's still relatively cheap with how the market's performed. So we have to see when market performance in equities is starting to stagnate, and that again will signal that there's most likely less confidence in the market, less expected returns, and if interest rates keep rising. Now, the current administration right now, politically, has talked about keeping with Powell, who's the head of the Fed. He's the Fed chairman. They've been talking about keeping interest rates potentially below 2% and not raising them if things start to turn over. Again, you got to keep up with monetary policy, guys. Listen to the positions of what they state. They're pretty transparent with it, as much as I don't like banks and the central authoritators in the financial world. They will give you some decent hints as to what they're currently pursuing at the moment in regards to managing monetary policy. But going on towards equities here, I want to talk more about the actual technical price action. We see all these indexes that are saying the market is overvalued, but we've seen that sometimes markets can remain overvalued for quite some time. My current position on equities, guys, again, is the idea that we are on the ladder of this run up, but if we get a breakout above the highs here on the S&P 500, as we already have, for example, with the NASDAQ, as we've had multiple times since back here in January and February when we started to see an actual pullback, we could very well see continuation, a nice parabolic run up over the next few weeks in prices, and I think tech stocks will continue to rally. We might see Amazon at $1 trillion following Apple, and Google at $1 trillion, and Facebook at $500 billion. Whatever, we could very well see that. Markets can be irrationally exuberant sometimes. However, I will say, in the shorter term of things, I'm a little bit concerned here in regards to the falling star we've seen here on the daily chart, and it's right here at the market tops. Everyone was preaching the other day that markets are making new highs, and maybe if you combine all the indexes, maybe that's true, now that we've included the NASDAQ, and we have the Dow Jones and the S&P 500 rallying up a tad bit. And you have things like the Russell 2000 that are small caps, that are higher risk, and most likely will move in a high-risk market. But no matter if we just reached highs the other day, we also had a very bad close. And right now we're slightly below it. We're not selling off like crazy. But if we start to get a momentous build up again below the 50-day moving average, I think you're going to very well test not only the 200-day, but we could very well see a collapse below that. At the moment, not panicking, not until we go below the 50-day moving average, and that's enough price range to where at the moment I'm just remaining neutral at these levels. I haven't been trading equities, and at the same time I'm not shorting the hell out of equities. I'm keeping it pretty neutral here. I'm just focused in crypto right now at the moment. I still think that as we are stepping towards the ladder of this run up, we're going to be stepping into a recession of some sort, whatever the catalyst may be, and with a drop in equity prices falling as steady as I think they're going to fall, off the evidence we can see and how these markets are propped up, it's going to probably be beneficial to look towards hedging positions. So what that is for you, it's going to have to be determined by you yourself. But as we take a look across these indexes, the Dow Jones struggling to get up to these highs up here, and I honestly don't think, unless you get a continued rally in the NASDAQ or in the S&P 500, that the Dow's going to get carried up there. It's a little bit more heavier because it's trading with a lot of the large established manufacturers and industrial companies. Going on though, let's go ahead and summarize with the other hedge position everyone's watching, gold and silver, and we'll also take a look at uranium. Gold and silver are trading very similar. They've had a very nice bounce the other day for commodities. If you get these kind of bounces as well as these kind of sell-offs, trading to the short or long side, there can be some really good profits if you keep up with these longer term trends as we've been talking about. But I think gold is going to continue rolling over here. I'm not getting optimistic on it just yet, guys. Again, as much as I like the hedge positions at these levels, especially if you adjust them for in the sense of inflation, we're at some pretty cheap levels here, but I still believe you could very well see it come down to these lows or down here. And along with that as well, with silver, I've actually gotten pretty confident that we're not only going to come back down to $14 here, but if gold continues to go down towards its previous lows, that we could see silver come down towards around $12. Now, the last time we saw support for this was back here, and some would say that you probably get around $8 to $9 if you come down to this level. I don't see it happening. The gold to silver ratio doesn't really incline for that to be potential in regards to market price. So I think you're going to see this come back down towards around $12 in that case. And that would be one-fourth of what we were back here at the highs, around $48. It'd be very, very healthy for a decline after the crazy run-up that silver had. But inflation adjusted, guys, again, commodities relatively cheap right now, not to mention comparative to equities. Going on here, let's go ahead and take a look at URA. URA still playing within the wedge here, holding support continuously throughout this line here, the 5th time support, as we talked about the other day, just a few days ago. And hopefully we'll get a build-up and a breakout in commodities if we start to find some price strength confirmation across the board. I think you're going to need that. But uranium, again, is a specific case with all of the developments that are going on. Again, keeping an eye on it until we break that level. I think you're going to probably get a breakout around $13 in this case, or in the mid $13 range. If you get that, it'll be a test as to whether or not we can get over some of the long-term moving averages here. We've obviously could get over the daily ones, but the question for the long-term trend will be a question of the weekly moving averages. So that's it for the video, everyone. Thank you all so much for watching. What do you all think about this? What are you all currently looking at in commodities markets, in traditional markets, crypto markets? I'd like to hear what you all think down in the comments down below. Again, across the board, pretty neutral on most things. It's weird. It's a very quiet period in markets across the board. There's nothing right now that's really going on, nothing towards the fear side, nothing towards the optimistic side. It's just a lot of talk and people waiting to see if we can see some major trends here. And I feel as we start to exit the summer and go into the fall, we're going to start to see some really interesting things. So it's a matter of patience, guys. Anyways, I hope you all are having a wonderful day. Thank you all so much for watching, and I'll see you all in the next video. Stay tuned.